All right, welcome back for the episode of Carnivore Trades. Today is Tuesday, October 10th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, back into it here today. So I did take the day off yesterday for the holiday, although we did have some movement here yesterday, which we can talk about a little bit. So obviously, lots going on in the Middle East right now. Very unfortunate, horrible situation. That we can't really do anything about. But as it pertains to the charts here, you're going to see that, we did essentially kind of buy the invasion dip, and that is a normal theme. And the reason for that, most of the time, is generally the thought process, war is kind of, yes, it's inflationary, which is obviously right now it's kind of it's always a bad thing, but it's worse now because of the bond market, and obviously we already have lots of inflation, but it's also generally a time where central banks are going to be way less hawkish, so they don't want to stress the markets out. They don't want to stress out the system when it's already under stress. So generally that hawkish tone kind of tends to go away. But in any case, so it was kind of like a buy the dip there. But plus we also had a lot of momentum coming in off of Friday as well. So yeah, you kind of were reaching to think that we were going to crash based off of that. And again, if we were going to crash or if we were going to really come down, if we look at the futures here, yeah, we gapped down, but we would have been much lower. Where did we gap at? Right here. We would have been much lower by the open. This would have fallen pretty hard by the opening bell yesterday. But in any case, nice rally there, outside move. And then to get to today, 1, 2, 3 up. We were actually as high as 437 at one point, and I was just telling my members, look at where these assholes closed it, right? Right on there. So that's everybody's watching this. You're going to see a million videos today about the head and shoulder neckline, and this is the typical market maker job right here. So they close it right on the neckline. I'm just going to say that it's still valid. Reason for that is you didn't really. This is kind of artwork, right? It's not exact as far as getting that trend line drawn in there perfectly, and they didn't close it enough above or enough below to really say with conviction that it has failed. I do think we pull back tomorrow. If you're familiar, with like a 3-bar surge pattern, 1, 2, 3 up. You usually get a red day the next day. It doesn't mean that we're going to be down big. It just could be an inside day. So I do think that gets defended here. But, the bulls have had a nice thrust off the lows. There's a lot of bears here last week. They couldn't break it down, so you got to go the other way. And, there's certainly, we could come back to this trend line later this week. Again, tomorrow PPI, Thursday CPI, and we also have the Fed minutes tomorrow at 2 p.m. So there's reason for a pullback. It could just be the excuse the market needs to come back in. We could retest the trend line and still get through that. There's nothing to say that can't happen. I do think we do at least get up into that 441 handle, possibly even up to 444.50 to 445. That doesn't mean that the market can't go lower. Yes, it would negate the head and shoulders. That doesn't mean you can't go down. It just means that's no longer a pattern. But in any case, markets holding up today. We did pull back in pretty sharply off the highs around 1 o'clock. We had the Treasury auction. Just an excuse to pull back. We're up 17 points on the SPY in not even, like 2.5 trading days, essentially. Calls getting skewed. This is just a shakeout. They got to, take it down. The rubber band getting stretched, that type of thing. I wouldn't make too much out of it. We might gap down a little bit tomorrow. Short term, I'd say 432 is going to be pretty good support there. You can see that. And then, down to 431. I'd say 432, 433, and then 431 will be good short-term levels. But right now, markets are holding up. And we'll see. We'll see if we can get a higher low, possibly going into next week. And then I think we can get up into 444. Maybe 441 to 444.50. So right now markets are hanging in there okay, and we'll leave it at that. Let's look at the triple Qs here. So that was up 0.5% today. It did come off the highs. Like everything else, but recapturing that 50 moving average. So that's an important distinction there for the triples. And take a look. We are finally back above that trend line as well. Again, that acted as resistance the last 2 days. If we look on the intraday, you can see kind of where it backed off very close, and kind of backed off of that. Then we pushed up and then closed above it there today. So the triple Qs in a little bit better shape going up into this red bar high, again, into some resistance, right? This is where we broke down FOMC, or that was the day after FOMC, and again, that's where the sellers came in. So we should have to pull back or consolidate if we're going to move higher. Obvious resistance after that is right into this trend line here around that 374, 375 area. But again, we'll see. Maybe this can put in a higher low, and it'd be interesting if we pull back. Do we come back in here, and then do we hit this upsloping and then downsloping? So interesting little nexus there for the Qs. But again, getting a $2 gain. And we'll leave it at that there. IWM, that was kind of the big winner on the day, up 1.13%. Came off the highs, but did go into the 20 moving average. Again, 1, 2, 3 up. Closed back above this trend line here, going back to all the way to the October lows. So big, important trend line there. And we did close above this breakdown pivot. So IWM repairing some of this chart, structure here. This head and shoulder is still in play, still in play. So the IWM has a long way to go to negate that. And a good bounce here so far, but still below those moving averages. There's nothing to say this can't go down and satisfy that target, just so you guys know. If we do have somehow another leg lower, obviously the Russell would be most likely to satisfy its downside target, as with the Dow. Again, still below that 200 moving average, stalling out right there today, as with the 20. And again, if we look at that head and shoulder on the Dow, I can show you one more time. Takes you down into, I think, 320. So if we just copy that, yeah, well, 325. So it's not that far away. It actually got kind of close to that last week. But again, one possible rollover could take you into that area. So just be aware of that. But Dow getting a bounce and still stalling out at the 200. Again, another reason why I think the market's probably paused tomorrow. SMH here, again, up 1 1/4. That's holding up a little bit better than normal, or than the rest of the market rather. So that is something to keep note of. Again, going into this breakdown bar high, probably needs to consolidate or pull back. If it does, then we'll look up to this gap fill around 155. You don't want to start taking out these pivots here if it starts to head back lower. You get to 142, then you got to hold this. And if this area goes, definitely a sign of weakness. And again, there is still a big fat air pocket on the semis there, down to 129, so just be aware of that. But SMH holding up for now. IGV, looking at cloud. Again, getting a bid. This chart's a little bit messier, but it's in decent shape. Again, pulling back off of that red bar. I think I told you guys 350 to 352. And high of the day, 355.53. So that's holding up a little bit better than normal. We'll see if this can go sideways here. I wouldn't rule out another push up to that 367 handle. It's hanging in there okay. If you take this green bar out, the story changes. So just be aware of that. So 336.58. If you're above that, everything's fine, but you don't want to see that green bar go on a closing basis. That definitely opens the door back to 305, 320. But right now, no real problems, and we'll leave it at that. Dow transports here. So that did something today here. Finally closing back above the 20 moving average, and we talked about kind of this trend line here last week. Finally got back above that, so transports repairing themselves a little bit here, finally getting about above that big downsloping trend line going all the way back to the July highs. We'll see what kind of pattern we get. Might pull back a little bit. I told you guys 15.2 to 15.3. We got to 15.178 today and then pulled in off the highs. If you base here a little bit, I wouldn't rule out a move back to 15.5, but that is, there's a lot of resistance up there on the daily in that area with that bear flag breakdown. But transports finally getting a little bit of a bid here, and we'll give them the upside bias for now. All right, let's get over here to interest rates. Okay, so again, starting off with the 2-year, as always, again, we talked about this green bar. We did break through that, and we sold off pretty sharply yesterday, at least in the futures there. Bond market was closed, obviously. Getting a little bit of a bounce here. Trend is still up, but again, I talked about this. As soon as we close it below that, kind of favored a little bit more downside in the 2-year, and it is backing off. Again, the yield curves are starting to tighten up still. So only inverted by 30 basis points, which is a lot, but considering where it was, it was well over 100 for quite a while. This is starting to repair a little bit here. 3-month, 10-year pulling back in, but again, it's still well off the lows set back in May. But there you have the 5-year. That's holding up better than the 2. So again, the long end of the yield curve telling us inflation expectations are higher. So 2 years starting to come in, the long end starting to come up. But in any case, 5-year backing off, 10-year backing off at 4.65. That did close below this green bar here, so a little bit of sign of weakness. I think yields need to pull back in a little bit. It wouldn't shock me to see the 10-year retest 4.35, and the 30-year, you know, maybe 4.5, somewhere in that area, maybe just retest a breakout in general. That would not necessarily mean that, you know, that wouldn't be a bad thing for yields, right? Just be back testing that breakout. I think in the near term, we have kind of topped out here. Not in the long term, in the near term. But again, yields pulling in, the 30-year takes out this green bar. You know, it's probably headed towards that 4.5 area, so just be aware of that. All right, anyways, let's get over to XHB. So XHB getting a bid here, stalling out at the 20, and again, getting back above that purple trend line, so that is a positive. We did close above that red bar, so that is a failed inside bar. I do think XHB can get up to 78 here in the not so distant future. Basically almost got there today, but you do have a failed inside bar, so we are expecting a higher move here in the XHB, and again back above that trend line, but short term still resistance here with that head and shoulder, which is still in play, but again we'll see if that ends up failing. VNQ coming off the lows as well, up just 36 cents. Still a really weak chart. We did close above, you know, a positive as we got back above this this double bottom here, but again on the weekly we closed below that. So new 52-week lows, new 52-week closing lows as well. Actually, you got to go back to, you got to go back to like COVID, to the last time that we had a weekly close that low on the VNQ. And right now we're trying to save that monthly 200, but I don't like that inside bar pattern there. It doesn't mean it can't get a bid here in the near term, but not a strong chart, and REITs do not look like they're in good shape here. But again, they did come off the lows, so we'll leave it at that for now. XLF, again, getting a bid here. Up 24 cents, still a lot of resistance with this trend line. Banks are kind of lagging. Again, so again, still an industry group that has not done much. Still red for the year. And still really not that far off the March lows. So again, struggling industry group. And again, I think, you know, as we get into the winter and maybe even, you know, they might hold up into next year, but I think they're telling us that there's still lots of problems out there. Again, we know what's going on. Obviously, just talked about REITs, but commercial real estate, there's a lot of exposure there, and obviously the market feels the same way. So anyways, KRE also on the weaker side, trying to hold that 20 moving average. There's a lot of resistance at 43 if it gets through that, as well as 44. But again, trying to float up there a little bit. KBE 38 is going to be your resistance there, and then KBWB, we'll say 40.50 for that one. Broker dealers here up 0.5% on the day. I told you guys 490 went up there and pulled back. If this consolidates, it can go to 5. If it rolls back over, we'll look at 475 on the downside. Crude here continuing to hold up. So again, obviously getting a bid due to geopolitical reasons, but again, you went into support, and that's generally going to put you in a position to get a pop regardless. And that's what happened. So we did leave a pretty ugly gap, which I think gets filled. Short term, I think this probably wants to get up to 88, 80, 89, testing that red bar high potentially. That's really all the upside I have for it right now. I don't like these big fat gaps, especially on a weekly. Again, I talked about this. Everybody was so bullish when they did the OPEC cuts. I said, this is not, I said, don't buy oil here. Let it pull back. That gap's not going to, it's not going to be open for very long. And, but I think short term, we do go up there and test 89 to 90, 88, 89, 90. And then maybe we go back here and fill it. But it's holding up okay. If you look on the intraday, just hourly consolidation, no real problems there. So crude hanging in there okay. XLE also getting a bid here. There's still a lot of resistance up here around 89. I wouldn't do anything with it at the moment. XOP, same thing. Leave these alone. And then the OIH also getting a pop, but below those moving averages as well. But it did hold that level I gave you guys with that 20-week moving average for now. But right now I'm kind of scouting this for a lower high on the weekly time frame. Let's quick skip over to uranium here. That's hanging in there. CCJ, I talked about this last week. We did close above that green bar, so it lives to fight another day, and it's holding up. If you close the week below 36.91, It's done for the foreseeable future. URNM holding up as well, but just kind of an inside week so far. Nothing really to write home about. Nat gas hanging in there okay. That was up yesterday and today. It still does need to pull back a little bit. But again, you can see what happens. This is the reason why I said you got to get above 3 on a weekly. Because when this goes, it ignores RSI, it ignores Bollinger Bands, it ignores overbought, and it goes. And that's what happens when you squeeze, especially with a commodity. But we'll see. It probably will have to revisit that 20 at some point. Everything does, but it is holding up there. But I'd like a retest of the low 3s here. Get back to that 20, or maybe even like a 12. Some of you guys use the 12 MA when it's strong. Sometimes the 12 MA can hold up, but in any case, Natty hanging in there, and again, no issues. All right, dollar index. We talked about yields a little bit earlier, and I said yields probably topped out here short term. Again, so there's, you see the dollar. That's obviously going to dictate the yield here in the near term. We did close below that 20 moving average. Really, for the first time, we kind of closed right on it on the 30th of August. But last time you got to go all the way back to July 26th. So we did close below that. We did close below this green bar here. I think this trend line, I know we closed below that as well. I think it gets defended once here. Usually the third hit, which is, there you go, 1, 2, 3, will be a fake out when you break below it. So I do think the dollar gets a pop here, and again, that kind of coincides right with the trend line on the spiders and the 3 bar. Whoops. Right, so 1, 2, 3 up. Usually you get a red day. You're into the trend line. Makes a lot of sense, right? It coincides with that level on the dollar. So I do think we're up tomorrow. But if this is, I'm looking for lower highs here. You put in a lower high, I think yields top out. And obviously that, would be a positive for markets as well. But in any case, 104.50 is kind of a short-term level I'm watching there on the DXY for a continued pullback. All right, anyways, over to gold here. That got a bid as well. Again, uncertainty, dollar pulling in. Gold's going to get a bid. Short-term, 1900 is your level to watch. I do think that gets hit, but I don't think that gap holds very long either. Silver I like a little bit more, 2250 in the short term, and then we'll see from there. But this is a very good level here at that 21 handle. Platinum getting a bit off of 860. We'll see what that one does here. I'll have to watch for pattern, but it is, it did basically hit the buy zone last week and then got a pop off of that. So I'm watching that for pattern. And then palladium, nice outside move today, but I still would like to get this cheaper. You get closer into that 1100, Pierce of 1100 area. I think it's a home run. But again, got a bid today. We'll leave it at that. Copper with that weekly breakdown, closing below this wedge here. So I'm favoring downside to 340, and I've been talking about that level for a long time. Doesn't mean it will go there in a straight line. Lastly, Bitcoin still holding up okay. No problem. Still a bullish inside bar there on the daily. And I'm giving that the upside bias to 30,000 until proven otherwise. If you close below 26,984 on a daily, then that pattern has failed. And I think the weekly takes over, which currently is a bearish inside bar. So again, conflicting time frames there with Bitcoin. All right, lastly, again, flipping back over to the spiders here. So again, they close it right on this neckline. Tomorrow, I think we're red. They'll probably keep, they're not going to make it that easy, right? Just like they did today, but basically closing right on that. But for bulls, you want to pull back to the trend line. A higher low can get you up into that 440 to 441 area. And at bears, it's pretty simple. You just take it. You got to take this down. We never really confirmed higher lows here on the daily. So, and again, looking at the intraday, ask yourself, did we build supports on the way up? Not really. So you do need to retrace here and build some supports. You need to do some backing and filling for bulls. But I am kind of favoring here in the near term. We do put in a higher low and head up into that 440, maybe 444 handle on the spiders. But again, we'll see and take it one day at a time. First, you got to negate this head and shoulder pattern here. But bulls got their work cut out, and we'll see what we get here tomorrow. Remember, PPI in the morning and then Fed minutes at 2 p.m. So be ready for those. And then obviously CPI on Thursday. Anyways, guys, gonna wrap up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all tomorrow.